Hello everyone and welcome back to Markets Analyzers. Imagine driving a car at high speed with a blindfold on. Sounds crazy, right? Well, according to many experts, that's exactly what the US Federal Reserve is doing with the economy right now. The Federal Reserve, America's central bank, just like the RBI controls interest rates, inflation and money supply in India, the Fed does the same for the US economy. So in America, they are struggling with an unusual level of uncertainty. They told that they haven't seen such level of uncertainty in last 2 decades except during COVID times. Inflation, unemployment and economic growth are all unpredictable, making it tough for policymakers to decide on the next move. Let me put you in a situation so that we can understand better what is Fed going through. Imagine you are planning a wedding. You don't know if the gold prices will rise or fall, so you are unsure whether to buy jewelry now or later. The catering cost keep changing, making it hard to fix a budget. Some guests are uncertain about attending the wedding, so you can't finalize the venue size. Because of all these unknowns, making decisions become very difficult. This is exactly what's happening with the Federal Reserve. They don't know how inflation, jobs, and growth will change, so they are struggling to decide on interest rate. So what's happening? The Fed recently decided to keep interest rates between 4.25% and 4.5%, with a plan to cut them down by 50 basis points later this year. But here's the catch. Fed officials themselves admit that they have no clear idea where the economy is headed. 17 out of 19 Fed members reported higher uncertainty in their inflation and unemployment forecast. That's a big deal. The last time we saw this kind of uncertainty was in 2020 during the pandemic. But there is another twist. Trump's trade war policies are making things even more unpredictable. If new tariffs are introduced, it could lead to higher prices for consumers and companies. Will business absorb the cost or will they pass it on to consumers? So it's a very messy place to be. Trump has set 2nd April deadline for announcement of reciprocal tariffs. That means your daily expenses, food, electronics, and even cars could become more expensive. Okay, we know that US Fed is facing massive uncertainty. Interest rates, inflation, unemployment, none of these numbers are stable. Plus, Trump's trade policies might shake things up even more. But as an investor, the real question is, what should we do? First, let's break down the possibilities that can happen. If inflation remains high, the Fed will likely delay rate cuts. This could hurt stock prices, especially in sectors like technology and real estate, which depend on low interest rates. The other possibility, if recession kicks in, the Fed might cut rates aggressively to boost the economy. In that case, defensive stocks like healthcare, utilities, and consumer staples might perform better. The other possibility, if tariff causes price to rise, companies might pass on cost to consumers. This could lead to weaker consumer spending, affecting retail and manufacturing stocks. However, certain sectors like commodities, gold, oil might benefit from inflation fears. So instead of panicking, you just diversify your investment. Don't put all your money in one sector. Keep an eye on the Fed's next move. Their decision will impact the entire markets. And finally, look for better opportunities. As always, some stocks drop due to panic, but strong companies bounce back after the drop. As Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. The key to investing is staying informed, thinking long term, and not letting fear control your decisions. So, friends, this is the video. If you like the content, try to like the video, share the video with your friends, and subscribe to our channel, Markets Analyzers. I will come back again with another interesting video. Until then, have a great time.